Foreclosures are on their way up. Buyer interest is going down. We are officially in a buyer's market. So, what is to come with the Phoenix real estate market? Let's talk about it today. So, first, let's talk about foreclosures. That's always a hot topic. Everyone's always interested in what foreclosures look like. And indeed, they are increasing here in Phoenix, albeit just a little bit. But we're going to look anyway. Okay. So, this is a chart of a lot of these foreclosures over time since 2002. I know it's very hard to see, so I'm going to zoom in and do my best here. And you can see we've had 416 notices of trustee sales, and that is for Maricopa County in October, and 55 actual trustee sales. So what does this mean? Well, in Arizona, you get a notice of trustee sale, which gives you 90 days to either sell the property or get current on your payments before you actually go into foreclosure, which is the actual trustee sale. So this is saying that there was 416 notices to homeowners who were late on their payments to some degree, where they said, hey, in 90 days, this trustee sale will take place if you do not come current or sell your property and, repay the loan. And 55 of those didn't actually get come current with their payments. So they actually went into foreclosure and the property was sold via a trustee sale. So 419 for October, that is pretty low. However, you can see this little spike here, and this is why the Cromford Report is calling it out, because we went from last month, September, being 304 notices of trustee sales to this month of 416. And this has been a little bit elevated, as you can see, since 2021, because no one was in foreclosure, hardly anyone, during 2020 to 2021 for a number of reasons. The market was so hot, everything was selling, there was so much buyer demand, and we had forbearance as well. So if you look at that, that was very much an anomaly. That wasn't a normal standard. So of course we saw a spike after we came out of that market of foreclosures, but still pretty minimal. And then as we look back to 2020, 2021, or 2020 and 2019, we had more foreclosures consistently, more in this like 400 or at least notice of trustee sales, 400 range, it appears to be during those years, was pretty normal. And before that, obviously was much higher as we go back to, 2012, 2013. Of course, even before that, it got very, very high. So the Cromford Report is calling this out just because we've seen this increase, and they say for context to know that this number of 416 would be considered a low number prior to 2020. But since 2020, this number is definitely an increase for us. They're saying that October did have a high number of days for trustees to file, so there was 23 total. But there's no denying that we're seeing a rising trend in these notices. Also saw those 55 foreclosure auctions, which is also the highest number that we've seen since February of 2020. So what's going on here? Well, they're saying that a lot of these foreclosures were actually on hard money loans, meaning that it was most likely fix and flip buyers that were having trouble actually selling the property and decided to let it foreclose rather than pay their insanely high interest rates on their hard money loan. So something to think about if you are thinking about being a fix and flip buyer. It's not working out too well for some. Plenty are doing just fine out there for sure, especially if you're experienced. But if it's something you're trying to dip your toe into, just know that that is what is going on. And why is it hard to resell something? Well, our buyer demand is a little bit low, and we are getting into this buyer's market, like I mentioned. So here's the latest. Mortgage demand has fallen 41% since Fed's 50 basis point cut. Now, this isn't even the most recent basis point cut. This article was written November 6th, so it is a little bit dated. But they're saying mortgage demand declined for a sixth straight week on the back of higher mortgage rates, according to Mortgage Bankers Association. Applications dropped 10.8% on a seasonally adjusted basis during the week ending November 1st. Demand has plummeted 41% since the last increase in applications during the week of September 20th, which coincides with the Fed's decision to lower the rate by 50 basis points at that time. Now, they're saying 10-year Treasury rates remain volatile and continue to put upward pressure on mortgage rates. The 30-year fixed rate increased to 6.81%, the highest level since July. Of course, this was written November 6th, so a little bit dated. But it's true. There has been a lot of volatility with mortgage rates. We saw those lows in the beginning of September, and then everything climbed back up. And approaching the election, there was a lot of volatility. And post-election, I think there will be some of that as well. They're saying that many market observers are speculating that borrower demand could get worse in the near term. With Trump claiming the presidency, the 10-year Treasury yield jumped due to expectations of higher government spending levels. In turn, mortgage rates are likely to keep rising, although Housing Wire analyst Logan Motoshami said the spreads will have to dramatically worsen for rates to hit 8%. So time will tell on what happens with rates. But now that we are through the election, there's still some volatility, and we're going into a slower time of the year traditionally for the market, especially here in the Phoenix area. Now, aside from mortgage applications, we can also measure buyer demand by looking at our listings under contract. And this is all the way up to like end of October, So this isn't, exactly where we're at today, but you can see that we had a little bit of a jump up in listings under contract, and then they've stayed pretty stable, but they have come down since September. And this is around the time where we saw rates really go down. So the market, the housing market reacted to those rates coming down. Buyers came out, got under contract. We saw kind of a spike in that in September, and then it dropped off as rates started to increase. We've remained pretty stable over the last few weeks. So we'll have to watch this and see if anything changes with buyer demand. Again, getting into the holidays, unless you are a buyer who really needs to buy a house, many buyers tend to push this off until the new year. Now, last week I talked about how important it is for us to be keeping our eye on the active listings in our market. So we're going to take a look again this week, and we are still kind of in this plateau in a sense, but still slightly rising. 21,462 versus 21,411 active listings on the market. So we have to realize that if this buyer demand does not stay strong or keep up with the number of listings, and we continue to see new listings hitting the market, we are going to go further into a buyer's market because there are going to be more buyers than there are sellers. So this is going to be really important to keep an eye on so that we can understand what's going on with our supply and demand balance in the market. And I would anticipate that we're going to start to see more listings hitting the market now that we've gotten past the election, but we'll see if that actually plays out. Like I said last week, it would be rare for us to end the year with more active listings than where we started in November. So we'll see if that actually plays out. I wouldn't be surprised if we do. However, it's not a very typical trend for us. So that would, be a sign for us to think about what might be going on here if we're ending the year with higher listings than where we started in November. Now, one thing I've been looking at week to week is the contract ratio. And this is really helpful for us to see what's going on in particular zip codes and then across the valley as well, as far as the number of listings on the market and how many listings are actually under contract. So it gives us a good idea of the heat in the market. As you can see, the Cromford Report has this nice little heat map here by zip code, and we can see based on the colors which areas are warmer than others. And we are seeing a lot of green and blue now. And a couple weeks ago, if I can jump this back without it refreshing the whole feed, you can see we had a lot more yellow. And yellow is that like 60 to 80 hot zone. So this was as of October 19th. So not even a month ago, we were seeing more zip codes with that yellow low or hot reading. Compared to today, there are only two, Chandler in 85224 and El Mirage in 85335. So the market is definitely showing this move towards a cooling trend. You'll also notice a lot more blue throughout Central Phoenix and some areas of Scottsdale, which is indicative of a cold market. So we can see that as it breaks up by zip code. What is interesting as well is the Cromford Report just shared this chart here about the various contract ratios associated with the price range. So you can see that like an annual change over here on the right hand side, most of these are negative year over year. So for homes under 300,000, and this is all just for single family homes, there was a negative 32% change year over year in that contract ratio. 300 to 350, a 31%, negative 31% change, 350 to 400, negative 15% change, and so on. Pretty much every single price range saw a negative change year over year, meaning that the market was actually softer for those price ranges this year as compared to last year, which isn't surprising because overall we have seen the CMI weaker than last year, and we've just seen a lower number of transaction volume. Everything has been a little bit slower and weaker this year as compared to last year, especially when we started the summer. We did have a pretty busy spring season. We did see price increases, and since the summer, things have really kind of slowed down and tapered off. Now, there's only two price ranges where we saw a positive increase year over year, which was 1.5 to 2 million. That had an increase of 20% year over year in the contract ratio, and then 5 million to 7.5 million. So both of those are somewhat outliers. You know, luxury usually behaves a little bit differently than the rest of the price ranges do. But it's pretty interesting to see just those two outliers when everything else has been negative year over year. So I like to share this because I think this gives us a really good picture of what's going on. Even though we check this week to week, you can see like that major change by price range, and obviously overall weaker now than we were last year. By the way, if any of this information is helpful for you, make sure you hit that like button and consider subscribing to be part of our community going forward. So let's check the CMI as we do every week. 89.3. This is also as of November 6th, so it is a little bit dated, but we are still hanging out in the very top end of a buyer's market, just kind of dipping our toes in there for now. Demand at 76.8 and supply at 86. Both of these, normal being about 100, so this is about 24% below normal for demand and about 14% below normal for supply. This week, I don't have the chart city by city, unfortunately, for the CMI, but I'll make sure that I have that for you guys next week. By the way, if you are interested in what's going on in your area of the valley, whether that's your city or your zip code, you can get a really quick and easy market snapshot on my website. Check the description below for that information. And I know we talked a lot about contract ratios, so if you want to know the contract ratio in your zip code, I have a link to do that as well. Home buyers, if you are one of the serious ones getting out there during the holidays, you can search my MLS for homes for sale, so check the description for that information. I'll be back with you guys next week for my next market update.